Hello, my name is Margaret, and welcome to your first-time homebuyer tutorial. In this session, you'll learn about the steps involved in purchasing a home. You'll learn how to qualify for a mortgage and how your approval amount is arrived at. You'll also learn how your credit score is calculated, as well as gain a better understanding of the different interest rates and down payment options available to you. Of course, if you prefer, you're always welcome to contact me directly to talk about your personal home buying needs. My contact information is available at www.bcmortgageadvice.com. Let's talk about the steps involved in purchasing your own home. The first step is determining how much you qualify for. So you can begin your home search with confidence. This is where the expertise of a mortgage broker is important. They can help you weigh out your options and plan the best mortgage for your short and long-term needs. You'll also need the assistance of a good realtor. The realtor is there to protect your best interests and usually don't cost you anything for purchasing, as they typically split their fee with the selling realtor. Incidentally, there's usually no fee to use a mortgage broker either. Mortgage brokers are typically paid by the lender. Now, almost all offers will have conditions or subjects that will need to be removed before completion. A couple examples are the subject to financing and subject to home inspection clauses. Once your offer is accepted, you'll usually have about 5 to 10 days to remove these conditions. If you don't remove the conditions, the contract will lapse and the deal will not go through. During the subject removal period, you'll need to obtain property information, and you'll need a copy of your purchase agreement, feature sheet, property disclosure statement, and possibly an appraisal. Your realtor and I can work together to gather this information, so there's less for you to worry about. If the lender is satisfied with the mortgage application, they'll issue a letter of commitment. Then, once you remove the conditions on the offer becomes a binding contract. At this point, you'll also need to provide the seller with a deposit in order for them to take the property off the market. The last step is the completion, or also known as the closing. This is taken care of by your real estate lawyer or notary. Their job is to make sure you receive clear title of the property and register the mortgage for the lender. This can seem complicated, which is why I recommend you work closely with a team of real estate professionals, like your mortgage broker, realtor, home inspector, and lawyer to guide you through the process. So what determines if you qualify for a mortgage? In its simplest terms, lenders look at your income, credit, and down payment. Your income determines your ability to repay the mortgage. Your credit determines your willingness to repay the mortgage, and your down payment determines your investment, or the risk you're taking in the transaction. Lenders will want to know how much you make and your level of stability. If your income fluctuates, so say you're a business owner or you earn commissions, lenders will want to see a 3-year average of your income. If you're an employee, your income is pretty stable, so a lender will want to see an employment letter and recent pay stub. Your employment letter will indicate how long you've worked at a company, what your position there is, how much you earn, and your status. You can find an example of an employment letter at bcmortgageadvice.com. So how much can you spend? As a general rule, a lender will allow you to spend up to 32% of your gross income on housing costs. This will include mortgage payments, property tax, and heat. If you're buying a strata property, lenders will include the strata fee in the calculations as well. If you have other debts like car loans or credit card payments, lenders will want to limit the mortgage so that you're not paying more than 42% on housing costs plus any other debts that you're required to pay. These limits vary depending on the lender. The next item lenders look at is your credit report. There are 2 major credit bureaus in Canada, Equifax and TransUnion. Credit bureaus keep a record of all your debts and your repayment habits. Lenders and credit card companies across Canada report how you manage your debt and manage your debt payments to the credit bureaus. Your credit report will also indicate a credit score. The credit score ranges from a low 300 to a high 900. The higher the score, the better. Your credit score is the measure of the probability of defaulting on your debt over the next 2 years. For example, someone with a credit score of 650 to 699 has a 14% probability of defaulting on their debt over the next 24 months. Let's take a look at what determines the credit score. There are 5 factors that determine your score. The most important one is your debt repayment habits. This accounts for 35% of your score, and the next important factor is the amounts owed. Your credit report looks at your balances relative to your credit limits. For example, if you had a credit limit of $10,000 and your balance is $9,000, your credit score may be negatively impacted. The key is to keep your balances low, ideally no more than 35% of the limit. The third factor is the length of time on the credit bureau. The bureau looks at the average age of your accounts. This means it's not a good idea to close out long-standing credit cards even if you're not using them, as this could lower your score. The fourth and fifth factors are the amount of new credit and your mix of credit. Most lenders have a minimum lender score and will not consider your application if you have a credit score of less than 600. When it comes to down payments, there are two types. If you have more than 20% of the home purchasing price as a down payment, you have what's called a conventional mortgage. If you have less than 20% down payment, you have what's known as a high ratio mortgage. A high ratio mortgage is insured through one of three mortgage insurers, and those are the Canadian Mortgage and Housing Corporation, Genworth Financial, and AIG Insurance. You'll pay a one-time fee to insure the mortgage, and this fee is then added into the mortgage and paid over its lifetime. The fee depends mainly on the down payment size, so the higher the down payment, the smaller the fee. The minimum down payment required is 5%, and ideally that should come from your own savings. This shows that you have the ability to accumulate funds on your own. If you don't have the 5% down, you can also get a gift from a close relative or get a cashback from a bank. Borrowing the down payment or getting a cashback is very much like getting a mortgage with zero down, since you're not really using your own money. However, please keep in mind that lenders will want you to have a strong credit if you are borrowing or getting a cashback for the down payment. And when it comes to interest rates, you also have three main options. You can get an open fixed rate, a closed fixed rate, or a variable rate. Of course, there are pros and cons to each, so let's explore. First, let's take a look at the closed fixed rate mortgage. With this type of mortgage, you're locked at a specific mortgage rate for a set term. Most lenders offer terms from 1 to 10 years, but often have penalties or restrictive conditions with regards to repayment or additional lump sum payments. This might not be the best choice if you think you might be moving before the end of the term. However, it does offer some great rates. Next is the open fixed rate mortgage. With this option, interest rates tend to be a little higher than the closed fixed mortgage, but you can repay the mortgage at any time without a penalty. This might be a good choice if you think you might sell your home in the near future. The nice thing is that lenders will usually allow you to convert to a closed mortgage at any time. Your third choice is a variable rate mortgage. With this type of mortgage, the interest rate fluctuates with the prime. As the prime rate moves, so does the interest rate on your mortgage. Although you can generally convert to a fixed rate mortgage when you feel the need to, some lenders will charge a penalty. Determining the right interest rate plan is the most important decision you can make. Be sure to consult a mortgage broker to determine which plan is best for your situation. Now, in addition to the costs of your mortgage, it's important to be aware of the other associated costs with purchasing a home. Some of the most common ones are an appraisal fee, land transfer tax, survey and title insurance, legal fees, home inspections, property tax, and fire insurance. Of course, your mortgage broker will advise you of these costs. A question that I'm often asked is, what information do you need from me to get me a mortgage, and what do lenders really want to know? Well, first, I'll need to gather information about you as an individual. Things like your age, marital status, birthday, and the number of dependents that you have. I'll then need to learn about your employment and financial situation, things like your assets and liabilities. With your permission, then we'll pull a credit bureau and view your credit report and credit score. Your qualification will also depend on your down payment size, amortization period selected, interest rate, and the specific lender. Together, we'll run through scenarios so that you can see all your options, determine the right interest rate and terms for you, in addition to discussing applicable mortgage programs like first-time homebuyer privileges and self-employment programs. As a mortgage broker, I have access to multiple lenders, so I can find you the best rates and terms while providing unbiased advice. Keep in mind, this is all I do. I don't work for a bank, so I don't sell checking accounts and mutual funds. Instead, I do mortgages every day. I do mortgages on a daily basis, so I have the experience to provide you with the right mortgage solution. Low rates, they're just the beginning. I'm here to make getting a mortgage easy. So contact me today or learn more at www.bcmortgageadvice.com.